So someone asked me about what strategy I use. Well, for most pairs, I usually use the supply and demand strategy. All I'm looking for are areas of extreme supply, and then I just put my shadow zone. So for instance, I'm just going to remove this and I'll show you what I mean. So this is USDJPY, right? As you can see, market came from all the way down here. So this was a very good drop. Made a pullback, then continued going lower. So at around this point here, around this level here, what do you see? So around this level here, you see a drop base drop, right? So you had a drop, and then market dropped even more after that base. So it was a drop base drop, right? Let me show you what I mean. So this is the first area that I will be looking for. So we have all, I just mark out the whole area. As you can see, I marked out the top and also the bottom of that area of that drop base drop. So I marked out the whole area, and all I'm waiting for is market to come close to that area, then I can take my entries. So in this instance, you can say that market made a drop base drop. That is a very strong area. So market may revisit that area before it continues even further down. Alright, so right now on USDJPY, market made a drop base drop, then visit that area and continued dropping. So you can also draw this trend line around here. You see this zone? So market came pushed from this area, pushed from this area around here, then went back, crossed again this resistance line, then just found resistance, then it pushed all the way down. So market here found support on this level. Here it found resistance, then it continued even lower. So this is a very key level. So once we have a key level, now you want to first of all notice where is market likely to go after it breaks out from this key level. That's a very first important thing. We have to first of all know where is market likely to go after breaking out of a key level or a key zone, right? So the first thing that you have to notice is that now we have an area of confluence. Where I put my shadow zone, where I'm putting my shadow zone here, we have a drop base drop, right? So you know that market, if it's likely to continue going upwards, it has to first of all cross this shadow zone or this this level which I've marked, right? So market has broken this. First of all, market broke this key level, and then we looked for a very significant zone, so which was a drop base drop, right? So at this level, after market broke the key level, after market broke the key level, it then went towards our shadow area. Now that's where we could have taken our entries even further for a sell, right? So we could have taken our entries from there for a sell. And yeah, that's how I usually take my entries, because I've been seeing someone texted me asking about how I managed to get trades. As I've told you, let me just repeat it one more time. You simply go to your charts, right? You simply just go to your charts, find out a key level, find out where market found most of the resistance, right? This is first of all a key level. So after market broke, so market came here, pushed all the way up, then it broke this level. What did market do after breaking the level? It came for a retest in this level. So after the retest, it continued even lower. So if market was at this point around here, what would I expect? So if market was at this point here, we see it breaking structures. So you can say that market broke structure here, going to the upside, broke structure, pulled back, then went all the way back up towards the same key zone that was waiting for. So what do? I say, okay, market has now what broken the key level. So where is market likely to go after it breaks the key level? Well, we have drop base drop, a very key supply zone. So if market went back to this zone, we're expecting market to sell. So you can simply just take your sell. If you are taking your sells from around that area, your stop loss is just above where I've put my shadow zone. Could have gone in for a target, because we know market is in a general is generally selling. USDJPY is generally selling on the H4. That means after we reach our key level, we can be in a position to even take trades towards the extreme demand zone. We are clearing this demand around this zone, right? So we are clearing demand at this level. So you can simply just take in your trades, knowing surely that market is going to drop up to the extreme demand zone, right? At this point, market hasn't yet reached our extreme demand zone. So what do? Very simple. When market hasn't reached your demand zone, you go to your charts again. Where is the key level? Well, market was making a drop base and then dropping and then dropping and then dropping until it started reversing. So once market starts reversing, what do you want to see? You want to see a breakout from this level here. So you want to see market push all the way up and close above this level. If market closes above that level, you just look for entries towards this key level that we marked out before. So that's my whole trading strategy. That's what I use majorly for USD/JPY and GBP/JPY, because JPY pairs I usually trade them during the Asian session. That's where I find most of my best entries. During the New York and the London sessions, I usually just keep on holding my trades, because in the New York and London session there's a lot of volatility. So that's why I usually take my entries during the during the Asian session where there is consolidation. Yeah, but that was a quick explanation.